Let's invite Ajay Srivastava, the CEO of Dimensions Consulting, also into this discussion. Morning, Ajay. Good to have you with us. What is the overall sense on the Nifty that you are getting? We had a great finish on Friday, but today the global cues are looking quite negative, actually.
Well, Lata, I think we are, I would say, tend to believe that we are in the middle of a rally at this point of time, because no matter what the negative news is, the buying interest continues not on the trading side, but on the investment side. That's a notable one, that the cash deliveries continue to be extremely strong over since January, actually. The cash deliveries have been very strong. Therefore, yes, you know, these, because the Crimea issue has come up, they will have a negative effect. We will see some profit taking. But I think the undercurrent is that it is a strong market, it's a bull market running clearly, and people with the cash to take delivery are the ones in the market, not the traders.
Okay, let me start with the auto stocks. Are you impressed by the numbers? I mean, there seem to be some green shoots, as Sonia put it. Would any of them be in your buy list?
See, Maruti was in the buy list, but I think Maruti has to come out of the problem with the Gujarat plant. I think they have done really disservice to the small investors. They're really trying to cheat other people, and that's what's holding the price back. Otherwise, there's no reason for Maruti to see another 10 to 15% upside in the price. The pure uncertainty around this is keeping the investors away. Between Maruti and Mahindra, I would not even say it's an auto stock. I think it's a tractor stock, it's a conglomerate, it's an IT holding stock. Mahindra and Maruti, I think the two M's would be the best buys in the market if you're not already in Tata Motors.
Ajay, hi, good morning, and good to see you in this morning. I just want to take that point you made about the market in the middle of a rally. How much of it is a pro-Modi trade, or how much more of a pro-Modi trade do you think this market could eke out? Because after the BJP-LJP alliance, Karunanidhi also called Modi a good friend over the weekend. So the market has gotten very excited on the thought of new alliances, etc. On this election trigger, how are you positioned?
I think we are positioned to be on the positive side, Sonia, not because of the Modi wave, but to the fact that at the end of the day, two main parties, the Congress and BJP, have absolutely similar economic agendas. So it really doesn't matter who comes to the power, because as you saw in Telangana, they got together, they got the bill passed, and everybody else had to stand outside and watch. Everybody else opposed, but these two parties came in together. So I think the mood of the market, if you look at what we are analyzing, is that no matter who wins the election, and I don't think so it's as clear as it was before that there will be a Modi or a Congress wipeout or whatever you want to call it. But I think the bottom line is, from investor perspective, strictly investor perspective, both are following the similar economic policies, and the good part of the policy is fiscal prudence. You know, government is spending less money. We still grew at 4.7%. We may grow at 4.5 for all I care in January, but now we are growing on genuine expenditure, not frivolous government spending. So, you know, to me, political situation is common economic policy across the broad spectrum in the political arena, which makes enormous sense for India as well as the equity market. Very strict. I don't care who wins. I think they'll follow the same policy.
Okay. Ajay, now to other areas that you may like. How about the crowded trade of IT and pharma? Is there more space in any of those stocks?
Well, Sonia will really throttle me if I say anything about Sun Pharma, but, but the fact is...
You can say what you like. You're sitting very far away.
But I think, you know, I know, that's the safety. But, you know, I think, on a serious note, I think there is enormous things happening in the market, because purely crowding is, why is the crowding? Because where else do you put your money? One. Number two, these companies are still showing a 20-24% traction. Any of the cyclical companies are not showing that 24% traction. Number three, you have a big bellwether called Infosys, which is still undervalued compared to the peer group. Tech Mahindra is still undervalued compared to the peer group. So two big players undervalued in the market, 24% traction. The three big pharma companies are showing strong growth in the market in spite of rupee being stuck at 61, 62. So all in all, a good situation. But yes, I think we are all reaching a point where hubris is taking over. Everybody is buying the same stocks. So whenever the exit happens, it's going to be one big mad rush. But for the time being, I think let's enjoy it, and I think remain invested in.
Okay. In that case, would you prefer any of the mid caps in either of these spaces?
No. No, absolutely no, and there's a reason for that. Not because I don't like mid caps, there are three reasons. One is the liquidity is under threat. Number two, whenever the big companies expand, the biggest resource pool comes from the smaller IT. So they will face attrition and they will not be able to get the business plans in place. So two things are going to impact them. One is the bigger players are getting more aggressive. They will take people from these companies. Number two is the orders are also consolidating on the bigger side than the smaller side. Number three is unless a company is being willing to be sold completely, that's a good place to buy into. But running the mid-cap companies and seeing that the valuation will outpace the large players, I don't think is going to happen in both these sectors. Both these sectors are volume specific, whether you look at pharma, whether you look at IT, and mid-cap investment have sub-performed and will continue to sub-perform. And you can pick up any name actually across the table. Maybe a Cadila or a somebody Zydus Cadila and all would be an exception, but by and large, the rule remains the same.
What do you do with the Reliance now below 800, Ajay? I mean, that's come as a bit of a shock to many, 6-month low. It's not moving with the market at all. Do you have any contrarian view over there?
No. Chickens are coming to roost, Sonia. Chickens are coming to roost. So if you are there, I think you better get out because it doesn't matter who comes to power again. I think we all know what's happened to the process. And look at one thing. Sonia, just aside, quickly. Nobody's complaining about the telecom auction. People were very happy with the 3G auction. People are very happy with the 2G auction. Why? The process was transparent. Even a tariffs may go up, but nobody's complaining. But here the process is under question, so you don't want to remain in the stock. The same story as Maruti, what the promoters trying to do, people don't want to buy the stock. Reliance is one stock. I don't think it's a contrarian play. I think it's a very risky play because there are too many issues on the table at this point of time.
Okay, and Ajay, finally, any of the financials you like? I mean, I'm including the non-banks as well.
I used to like ICICI Bank. I had a large holding in it, which I started liquidating. Because after reading the Reliance episode, and what was the ICICI Bank doing, lending $1.5 billion to unsecured entities? This is a classic ICICI operation again and again, which tells you why the company is undervalued compared to the peer. So we used to love ICICI Bank, but not be taken it. We have a position in Yes Bank, which we continue and build up, and we have a position in IndusInd Bank. Two banks which in the mid-cap category, we are building position. We have one position in them and building up. And these two, I think, have seen a major correction. These two are pretty stable banks with a decent portfolio. And I think on a pure bang for the buck, they'll give a better return to the market, to the investor, than perhaps the bigger ones.
Okay. Then one final question, since we keep asking you controversial questions, let me end with BHEL. That one was up close to 12% last week, and that's, despite weak numbers, despite everything, whenever the market is on the upside, BHEL does a bit of a jig. For a trader, is that a stock that you would bank on?
No. See, okay, again, I'm not saying it's not a good trader stock to bank on, but you must know when to get off. It's not a fundamentally strong stock. You've taken a 12% or 80, I didn't track it to be honest, Sonia, but if you've taken a 12% profit or a 20% profit, time to get off the table. Fundamentally, the stock is extremely weak. No reason to stay there, no reason to invest.
All right, Ajay. Thanks a lot for joining us with your thoughts on a range of stocks today. Do we have time